Solana is hanging on by a thread. As we sit here in late January 2026, we've just witnessed a brutal 19% flush, and it's pushed Solana down to a do or die support level. Guys, if this floor snaps, and we'll be pulling up the charts here in a second, the next stop might not be a bounce. It could be a free fall. So today, guys, we're going to be pulling up the charts. We are going to be looking at the technical death zone. We're going to be talking about some recent news stories, including the WisdomTree announcement. And I have updated 2026 price targets that you are going to need to watch to survive this volatility. Again, guys, this is not financial advice. This is for education and entertainment. As of late January 2026, Solana is showing a classic correction within a bull cycle structure. So after we peaked around 146 earlier this month, the price has pulled back to test a definitive support zone at around 117 to 120. Okay, so let's take a look at this. We're not even going to zoom into the 30-minute chart. We need to look at this support zone and why it is so important, and I will show you in a minute. But if we go back, this is going back to December of 2023, and you can kind of see this blue line I drew. Here's a low, here's a low, here's a low, here's a low we bounced off of, here's a low, here's a low, right? This is important. This low looks very important, this 120 to 117 level. If I zoom out even further though, guys, it gets very, very crazy. Okay, we're going to look at almost back to 2021. And here again, here's the blue line I drew at 117. Check this out. If we draw a Fibonacci retracement from this all-time low of $8 all the way up to our peak at, see how high is this? 290 some odd dollars. Look at this. You can't even see the blue line I drew because it 100% overlaps with the entire 5-year price chart at the 618 retracement. So to say the level at we are right now is important is an understatement. This level is insanely important, right? We're talking about a Fibonacci retracement from the ultimate low of $8 to the peak at over 290, and we are sitting exactly on the 618 retracement. Guys, it doesn't get any more crazy than that. So if we zoom in here, if we look at this Uber, this macro, this giant Fibonacci, the one that dates back to the low from January of 23, if we break this level, we might have some chop, but the next level in play is 69 bucks. Okay, so this is why we need to really, really look at this, level and hope that we hold on. So I'm going to clear this off quick, the big one. Okay, now if we zoom in just a little bit more, okay, I'm going to zoom in, drag the chart over, okay, here we go, bring this up. Okay, so we can look here. We drew another Fibonacci line from right here, from this low, which was on April 8th, up to the peak. Recent most high, 250. Okay, so you can see we're right in between, the bottom, the 96 bucks, and the 768 retracement, which is 129. So that's the zone we're playing within right now. So the first level we need to look at before the doomsday scenario is 95, and then after that, the 1272 retracement to the downside is 5289. Guys, these levels are currently in play. If this line right here, if 117 breaks, like I said, we're looking at 95, and then we're looking at 52. I'm not even going to talk about the upside yet because we got a big red candle forming, and this looks scary. Okay, this looks scary. So those are the levels that I'm watching. If we bounce off of this and crack up above this 148, sure, we might have some room to go to the upside, looking at 156 or even 174. But I'm not concerned about right now. Right now, I'm concerned about 117 and the fact that we are on a major, we are on a major Fibonacci retracement, 618 retracement, dating all the way back to 2021. Okay, so we're going to keep our eyes on that. And hopefully to break out of this, we get some sort of catalyst. And guys, catalysts only come from the news and things that the network is actually doing. So I've got 4 important news stories today that we're going to cover, so let's hop on over. All right, guys, so news in January surrounding Solana that could maybe be a catalyst or have some impact on the price. And we're not going to dive deep into these. I'm bringing you 4 headlines that I found that were very significant. Each of these could maybe have an entire deep dive on their own, but I'm just going to let you know what's been going on. And number 1, JP Morgan's on-chain bond. So guys, in a massive institutional win, JP Morgan arranged a $50 million tokenized commercial paper issuance directly on Solana for Galaxy Digital. This proves the network's real-world scalability isn't just talk. So go look that up, guys. 50 million bucks in a tokenized commercial paper issue. That is big time money on Solana. They are testing this thing to bring it mainstream. Number 2, ETF resilience, okay? So while Bitcoin and Ethereum, right, they saw ETF outflows in January. Solana's spot ETF, though, maintained positive net inflows, which is very, very good for the network. So this decoupling, right? So we didn't see them all move in the same direction. We didn't see Bitcoin and ETH outflows and Solana outflows. Solana had inflows. And this decoupling suggests institutions are viewing Solana as a unique technology play rather than just a beta to Bitcoin. If you go back and watch some of my previous videos, I always say the decoupling hasn't occurred yet. When Bitcoin moves, so does the market. However, this is the first sign that we are seeing that maybe the decoupling is starting to happen. Story number 3, guys, Firedancer upgrades. So the network is gearing up for the App and Glow upgrade, which is expected in Q1 2026. Combine that with Firedancer, which is already live, right? The validator client. And Solana is hitting peaks of 65,000 transactions per second, significantly reducing network outage narrative that plagued it in the previous years. So guys, between these two upgrades, right, uptime has never been more stable. The number of transactions they can process per second has never been higher, and things are looking great in terms of uptime and network scalability. And number 4, real-world asset dominance. So WisdomTree and Ondo Finance have expanded their tokenized US treasuries and funds on Solana, pushing the network to become a leader in the real-world asset sector. Guys, this was a huge story. WisdomTree working with Solana to put the tokenized treasuries on Solana. This is the type of thing we need to see to prove that the network is being adopted and it's being utilized by the big boys at scale. So that being said, I mean, there's a lot of other stories in the news. These were 4 that I thought were pretty significant that kind of fit the narrative of utility and adoption and scalability for that matter. So let's jump right now into our 12-month price outlook. So this is taking into account everything that's happened in January. And like I said, January was a big month. So here we go. The bear case price. We just looked at the chart. It could get dicey. So my bear case target is $85 to $95. So this could be triggered if macro liquidity dries up or if this 115, 117 support level fails. And this would lead to a retest of the 2025 lows. So be watching that level. The base case though, I've got 160 to 180. Now we could hit 160 to 180 even if we retest the lows. That is still possible. But my base case would be 160 to 180, a steady recovery as network upgrades go live, reclaiming the 2024 range but staying shy of the new all-time highs. Okay, hopefully, I mean that's where it's most likely to end up. There could be some chop in between, but 160 to 180 is my guess. And the bull case, 260 to 320. This would be driven by a super cycle narrative, institutional ETF demand, and a full breakout above the $210 psychological barrier. Guys, I'm even going to throw in here positive regulatory environment, including the passage or what looks like the potential passage of the Clarity Act would get us to that 260 to 320. So guys, in closing here, we know Solana has the fundamentals. It's got institutional backing, record on-chain volume, but the technicals are screaming at us. Be patient. So we need to see a daily close above 132, and we really need to keep our eye on that 115 to 117 level. If that breaks that key support level, that 618 retracement dating all the way back to 2021, we could see a slide down. And it might not even be retail or institution selling. It could be triggered by algorithms and bots that scan these levels and act on them immediately when they hit. When that could snowball into forced liquidation, right? There's all sorts of things. So just because if we see these levels break and the candle turns into a giant red broomstick straight down, don't freak out. It could be the algorithms and the bots that are just selling because the technicals hit a certain level and they force other stops and other people's orders to be liquidated. They cause people trading on margin to get margin called, and things can spiral down very quickly. This is where you need to look at it as a buying opportunity. So again, guys, this was not financial advice. This is for education and entertainment. But I want to know, what's your move? Are you stacking more Solana at 120? Are you waiting for 100? Or do you think we're going to see the big dip and you're going to pick some up at the $80 to $90 range? Drop your prices down in the comments below and I'll respond to every single one of them. Again, this is Luke with Ledger Prime, and we'll see you in the next one.